So disinvestment is nothing but diluting the ownership. Suppose this is a government owned company or it is a PSU, public sector undertaking. So if government has already diluted 30%, now government again wants to dilute 5 more percent. This process is known as disinvestment. So disinvestment, we can say that the dilution of the ownership of the government from public sector undertakings is known as disinvestment. So disinvestment was not much famous, it was not a familiar concept before 1991 LPG reforms, and the objectives were different. After 1991, there was a very famous Supreme Court judgment under which Supreme Court said the natural resources, the exploitation of the natural resources as well as the resources of the society, they belongs to the society. The government is just a custodian, it's a type of trust. People gave you this particular trust to look after the affairs of the natural resources of the society. So when the Supreme Court judgment came and after the LPG reforms, the objectives changed. But before LPG, the objectives were, because what the government gets when they disinvest, the government is getting money. If this is any PSU and it is diluting 5%, it means it will be purchased by individuals A, B, C, and they will give this money to the company, and company is of Government of India. So government is getting some money. That money can be used or it can be misused by the government. Misused means to low priority areas. Rather than investing the money, you are giving in the form of subsidy. So this subsidy, we can say, is misused, because right now it is an asset. If at present the government is whatever will be the dividends at present which are being distributed, that will go to the promoter. Promoter means Government of India. But if government has diluted 5%, so the dividend given to this 5% to ABC will not go to the government. It will go to the general public or whoever the investor is. So it means there is annually loss of the dividend. So the present investment, this is an investment only. You have done the investment, government has done some investment, government is getting some return. So you have converted this investment into some non-productive assets in the form of subsidies. Anyways, earlier the objective was to decrease the budget deficit. Before 1991, one of the objective, there were two major objectives. One of the objective was to reduce the budget deficit, and the second objective was to increase transparency and competition and market discipline. Because if you are listed in the stock exchange, then only you can dilute the ownership to the general public. And when you are listed in the stock exchange, NSE or BSE, there are few conditions which you have to fulfill, like every quarterly you have to give the result, you have to share your profit and loss statement with NSE or BSE. Just like the trading of the shares of Kingfisher Airlines, it was stopped, blocked by NSE or BSE 2 years back. The reason was Kingfisher Airline was not sharing this information with the shareholders indirectly, because NSE or BSE was collecting this information, NSE, BSE was uploading this information on the website. So few transparency norms are there. You have to fulfill those transparency norms. So because earlier, before 1991, during that license Raj and Hindu rate of growth, PSUs, the functioning of the PSUs, it was highly opaque. A lot of political intervention was there, not much effective they were, and majority of the PSUs, they were loss making because of that intervention only. So one more objective was to increase the transparency, the functioning of the PSUs, and to increase the competition and to force for the market discipline, because market is worked on the most efficient way. Take the example of Kingfisher Airlines and compare Kingfisher Airlines with Indian Airlines. Because Indian Airlines is of Government of India, that is why Indian Airlines is working. Otherwise BSNL, Indian Airlines, They should have filed bankruptcy 5 to 10 years back. The only thing is they are being subsidized. The money is being given by the government. But in case of Kingfisher Airlines, it is a private entity. Indigo is more efficient. That is the reason Indigo is surviving. Otherwise, all these companies, they will file bankruptcy. So to induce market discipline, this was also one of the reasons. They becomes more accountable to A, B and C. Then there was the classification of the PSUs in 1992. Government has done the classification of all the PSUs. So they divided the PSUs into strategic and non-strategic. 1992 classification. For strategic PSUs sectors, they said more than 51% or majority will be with the government. We say no, government is diluting the ownership. So what percentage of the shares government will dilute, whether it is 30%, 40%, 49% or 51%. So for strategic PSUs, for strategic sectors, Government of India ownership will be more than 51%. And for non-strategic, Government of India will be, the ownership will be more than 26%. So this was the classification of 1992. Then the government set up some Disinvestment Commission in 1996. The Disinvestment Commission recommended the sale of loss-making PSUs. Now we have roughly more than 250 PSUs. Out of this 250 PSUs, more than 170 are profit making and rest are loss making. HMT is there. HMT is a loss making PSUs. Take the example of ONGC. ONGC is a highly profit making PSUs. So it's not like all the PSUs are profit making or loss making, but ultimately they are paying 1.4, 1.5 lakh crore annually to the government. So overall PSUs are profit making, but few PSUs are loss making. So this Disinvestment Commission said the loss making PSUs, they should be sold in the market. So the recommendation was not accepted, and then the classification was again changed in 1999. As per this new classification, again strategic and non-strategic, but under strategic they put only 3 sectors: defense, railways and the atomic energy. And for these 3 sectors, there was no dilution of ownership. And for other non-strategic, the government is going to retain more than 51%. So this was the new classification as per 1999. Then in 2000, a Department of Disinvestment was set up under Ministry of Finance. So Ministry of Finance, a new department came, and the name of that department was Department of Disinvestment. Now the name of this Department of Disinvestment has changed in this year budget 2016-17. The new name is Department of Investment and Public Asset Management. So this is the new name of Department of Disinvestment from this year. From budget 2016-17, the name of Department of Disinvestment has changed. And there were new objectives. Now this department came up with some new objectives. So earlier there were 2 objectives: to decrease the budget deficit. So that has been renamed as to decrease the financial burden of the government. Because India is a developing country, aggregate demand is always more than the aggregate supply. So and India is also a capital starved country. We need money. So the first objective is to decrease the financial burden of the government. The second one is India needs a lot of infrastructure projects, and infrastructure projects needs funding. So from where this funding will come? So the first one option will be by disinvestment. For last year, it means for 2015-16 and for 2016-17, in the budget, the government came up with the disinvestment target. For 2015-16, it was 69,500. We can say 70,000 crore. For For 2016-17, roughly it is 55,000 crore. This is running, but in 2015-16, this was the target. And what was the achievement? It was 25,000 crore. So there is a huge difference. The fiscal marksmanship of the government is proving to be very poor. They targeted for 70,000 crore, but they achieved only 25,000 crore because nobody was purchasing the shares. Me and you, suppose we know that HMT is not a good company. We will not invest in the shares of HMT. Even if the government comes up, even if the government decides that they will come up, they will dilute the ownership. Just like Career Launcher or any company that is coming with the IPO, they want to dilute the ownership. So if they are performing well, just like CCD, the CCD came and the CCD came up with an IPO, but it failed. Why it failed? Because it was a general perception among the common people or the investor that the functioning of CCD is not good. On the other hand, there were a lot of pharmaceutical companies. They came with a huge profit. We will discuss all these details in the capital market. It's not that I like capital market chapter. I just love capital market chapter. It's very interesting. So the actual achievement is just 25,000 crore. We will see once this 2016-17 financial year will end that for the target 55,000 crore, what we actually achieved. But the thing is, this is there. The Department of Investment and Public Asset Management is the new name of Department of Disinvestment. Then to improve the competition, the market discipline, that is again one more objective. Then the wider ownership. If this is company fully owned by the government, so only government is the owner, you should dilute the ownership. When more owners will be there, they will come up with their new thoughts. So more technology will come, new thinking will come, policy making will change. That will make this company more efficient. So for wider ownership also is one of the objective. Then to fund the social program, the government has to give some funds to MG Narega. From where these funds will come? The first option is through the taxes. The second option is through the interest and all which is given by these public sector undertakings. The third option is by decreasing the asset. In the chapter of budget, in the structure of budget, we will discuss revenue receipt and capital receipt. Under that capital receipt, further divided into asset decrease or the liability increase. We also discussed under this asset decrease, we discussed disinvestment. So it is a non-debt type of capital receipt, and it is a debt capital receipt. It means you are not taking a loan, you are just decreasing your assets. So disinvestment, the money will go to the government, and then it is the discretion of the government that where to use that particular fund. So government decided some of the funds will be used for the social program. Then the next one is to depoliticize. If it is fully government owned, then they will be responsible only to the parliament or only to the government. But if it comes under SEBI, then you will become more accountable, because now you have to justify to SEBI norms. Now you have to justify to the shareholders. An annual general meeting will be held where the shareholders can ask any question from the board of directors. So all these are the new objectives as per prescribed by the Department of Investment and Public Asset Management. Then the new SEBI rule says, even if you are a government company, public sector company, but if you are a listed company, you have to dilute more than 25% ownership by 2017-18. SEBI gave a deadline that it is possible if the private promoter can misuse that particular power, or the private promoter is not taking the consent of minority promoter, it is very much possible for the government also. So SEBI said government also has to fulfill this particular rule, in which if you are a listed company, more than 25% shares should be distributed among the general public. So they should be sold. So this is also one of the reasons that the government is keeping the target of disinvestment so high. that 70,000 crore was the highest target till date of the Indian history. Then we have where to keep this money which you are collecting in the form of disinvestment. When government is disinvesting, where to keep this money? Two options, because government is maintaining three types of accounts. First, second and third, not much relevant this third one. Article 265 and Article 266 and Article 267. Jaldi se bata do. 266 is Consolidated Fund of India and Public Account Fund of India. Parliament, or we can say legislature, and it is executive. 267 is the Contingency Fund of India, not much relevant from this point. So NIF, National Investment Fund. So from where funds are coming to NIF? From the disinvestment proceeds. Whatever government is disinvesting, so these proceeds will go, whatever the money being collected. For example, last year, if it was 69,500 crore, so all this money will go to NIF only. But where the government is maintaining this NIF? That is a question. In the recommendations of 14th Finance Commission also we discussed that NIF at present is being maintained outside the Consolidated Fund of India. It means on the discretion of the executive. But this is bad. It is public money. So the present executive should not use this NIF. They should take the permission of the parliament, because parliament is regarded as a democratic temple. We gave the government, the general public, the citizens of India, we kept our trust with the legislature, not the executive. So this NIF should be maintained in CFI and it should not be at the discretion of the executive. 14th Finance Commission also recommended the same, but at present this NIF was started in 2005, a separate fund. Now where to use this proceeds which we are collecting under NIF? Earlier there was a distinction. 75% will go to the social welfare, the social programs of the government, and 25% was being used for some other PSUs. If a loss making PSU is there and that PSU needs some funds, so 25% of NIF will be allocated to such PSUs. But now that distinction has been abolished. It is the total discretion of the executive. Wherever they want to use it, they can use it. So next is the critical evaluation of the disinvestment, whether the disinvestment is good for the economy or it is for the bad for the economy. So there are a few positive things which you already discussed. These objectives, they can be the positive thing. The negative, there are 2-3 negative things. The negative is, we can say it may leads to asset stripping. The government, no, it's only the cost benefit analysis. If the government is decreasing it's like an education loan. Suppose you want to do your graduation from a good college. In that case, if you are taking a loan, then it is good. But suppose you are taking a loan and you want to do your graduation from not good college, so it is a liability. It is a future liability. But the action is same. You are borrowing. But where you are investing this borrowed money, that is going to decide whether this money is your asset or this money is your liability. Similarly here also, if you are disinvesting and investing in some good social program, just like for education, just like for health, if you are investing in all these things, then it is good. But if you are investing, if you are selling the ownership, selling the assets, disinvestment you are doing just to increase the subsidy, so in that case it is regarded as asset stripping. So it may leads to asset stripping. Then there is a loss of dividend. It means you are decreasing your asset. So in future you will not get the dividend. The government will not get the dividend. Then if suppose last year we discussed the government only get 25,000 crore, but the government wants to sell the shares, and suppose nobody wants to purchase the share and government came up with this thing. So think about the moral hazards of this. A government company having the backing of government wants to sell the shares of maybe 1,000 crore and no investor is there. Nobody wants to purchase, no private entity wants to invest in this government company, whatever government company it is. So it may leads to, it shows that the investors don't have trust on this particular company which is owned by the government. So it may have some international ramifications also. The rating agencies, the investor milau, the environment, throughout environment of the economy. So in such circumstances, the government of India, it uses the back channel thing. And the back channel thing is, this minister, finance minister, whoever, they will give a call in the office of LIC, maybe UTI. These are the national financial institutions, all India financial institutions, and they are of government only. So they will say, we came up with this IPO or FPO 1000 crore and it has not been purchased by anybody, only 200 crore has been purchased. So please purchase the remaining 200 crore, remaining 800 crore. It means what? Government wants to sell 1000 crore from this account, and government owns LIC and LIC is purchasing it. It means nothing is happening. It is one and the same thing. The government wants to sell to the general public. Now general public or the general investor, private investors, they have not purchased it. So just to save or to hide the face for the moral grounds, just government will we can say persuade LIC or UTI to purchase the remaining amount of shares, so that at least this under subscription we usually say, we'll discuss later on, so that the government will the moral ramifications of this particular thing can be saved. So actually there are so many instances of such type. In 2013 a lot of IPO came, a lot of FPO came. Government wants to disinvestment, but no investors were there, so government was forced to call to LIC or persuade LIC to purchase the shares. So this is also possible. So all these are the negatives of the disinvestment. So in the next lecture we will discuss about the banking sector, the banking, the types of bank, RBI, functions of RBI, and then we will discuss the reforms of the banking sector. We will discuss the Basel norms, maybe we will discuss the PJ Nayak committee, MCLR, Narsimham committee. All these things we will discuss in the next lecture. Thank you.